All right, everyone, we're gonna go over some reruns. Basically, I'm gonna go over the peaked strategy once more before we play the day. And then I will show you two risk management strategies just to summarize all the videos that we've made so far. And then we'll test it out on the day. So I'm just gonna make some drawings here so you can see. Basically, when we open, we typically see something like this. And so let's say we open and it goes up like this. There is no peak established until it comes down, right? Then that is one peak. And on its way down, there is no peak. It can keep going down. The only time the second peak is established is when it pulls back. And then the second peak is established. So once it pulls back, we know that it can do two things. It's aiming for that. That's the only play. It's not gonna come down. When it comes up and it stops and then it starts pointing down, that means it failed to attempt this peak. And in doing so, it makes a third peak. Now you're in between the second peak and third peak, but third peak is not established fully until it keeps going down, remember. So it's now challenging this peak. And so what it can do is it can try to come down, touch it, and then bounce back up. And then that makes the fourth peak. But we really don't need to pay attention to that because it'll just be the two peaks again. And then as it bounces, it'll come up. It could reject, make this peak, and come down, bounce again, reject, make this peak. And then again, we're at two peaks. It gets smaller and smaller. And so it'll go like that, 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 and that. And what does that make? That makes consolidation. And so you get this consolidation here, and then it's gonna break out because the volume is gonna drop. Everyone's gonna wait. They're waiting for direction because there's no direction at the moment, and so it just shrinks. And so you're gonna see something like since that peak's established, that means it has to come up, and it's gonna test this right here, this peak. You're gonna see that it tests this peak, and let's see what it say. It peaks through and goes like that. That means it tests this peak, and then it'll test this peak. And so each time it tests the peak, so let's say it breaks up here, and then it rejects and comes down. So each time it breaks through, each of these peaks will give you a chance of rejection. Each time, except for when. Except for that last peak. Right, so let's say it does that. So this is still one upward movement. Okay, these pullbacks are not strong enough to be considered peaks themselves. This is just usually a very small uptrend is what you'd see. The peak that you want to watch for is this. That's the line that you want to break. If it breaks and confirms, then it'll continue going. That's why when you pay attention to chart patterns, you see these chart patterns drawn. And now you understand why they're drawn that way. You understand what this one is. That's exactly what this is. And you understand what this one is. Right? That's just the inverse of this. And it could be larger or smaller. So this is on a large scale. And the larger the scale, the more play you have to each of the peaks. If it was a smaller scale, let's say we're going to remove all that. Let's say we had some big movements like this, like that, and then it went like this. it's the same thing. So you still have two peaks here. These are the two main peaks. This is still running. This is not a peak. Okay, this is consolidation. And so they're like mini peaks, but we don't need to pay attention to them because they're too small, and we already know what peak is it really trying to target. This one up here. It's trying to target this one. And so that's why you see this is called like the bull flag. Because really it's I don't like using chart patterns because they're not always correct. So this could essentially just break down as well as break up because it has two targets here. It's consolidating because it doesn't know where to go. It can go up and target this peak, or it can come down and target this peak. And so we typically see, let me see if we can change the color here. We typically see it come up like this, and then get rejected, and then come down, just like that, because it has to test this peak. Instead, if say it came up, and then it had a small green candle, or even any green candle, it confirms that it wants to continue challenging this peak. So you see a big spike that goes like that. And then here is when you could take your first profit, because it will probably likely make a red, and then it will try to challenge it up again. Like that. And then it'll confirm again, and then it'll go up. So that's all that there is to the peak strategy. You just need to wait for it to change direction. So let's say there was only one direction at open. Let's say it went like this, and it just went down. Okay, we'll leave that initial open as a peak, and then this will just keep going like this. That. You can't play here because there is no target except for this first peak that's established. You have to wait until it bounces. Once you do that, then it can do all this sorts, and then it can challenge it again, which means there's a peak here. And this is the peak that you play. If this peak fails, then you're actually challenging this peak because it's going to bounce. And so on trend days, we wouldn't really get caught at all because there's not going to be any peak that's established. If say it came back all the way back up here, and then it confirmed and kept going. Once you've exited all your positions, you can't enter here because there's no peak. This peak is gone. It's just this run again. It's the same thing, just reversed. So once you've exited while it's continuing in that direction, your play is done. That's why you can, depending on your risk strategy, you can leave one running. Or you can learn to only exit on overtaking candles, or exit when even if it comes down, as long as it doesn't settle below the momentum candle, you can keep going. So we'll dive into that as well, but just for the peaks part, that's all that there is. It's very simple. It's just a change in momentum and a change in direction, and that's what all your indicators are for. They're to show you the change in direction. And we're only playing once we confirm that these peaks are established. So we would not enter along here because we don't know how far it's going to pull back before it comes back down to make a peak. The only thing we do know is when it does come down, it will challenge this peak. We know that for sure. It has to challenge it. It has to test it, and it'll either reject and bounce, or it'll drop and keep going through. But you don't know how big the pullback is. It's random. And so what we do is we play one candle. That's also one more strategy inside the peaks, and we'll cover that as we play today's dates. But I just wanted to cover and go over the peak strategy just to confirm, and then show you in action what that looks like. And then we have basically two strategies we can use for risk management. And I'm just going to draw them here. So we have a peak like this and like this. So this is usually about 8:30, no, 9:30, 9 to 9:30. You get about two peaks. And then we're going to say it comes up and then it touches here. Okay, so that establishes the third peak. And let's say it bounces. Let's say it poked through, bounced back up, then it gave you a green. So let me change the color. Let's say it poked through. Let me put lines. I'm gonna put a line here, trend line, and put another trend line here. So this one I'm gonna change to green. I'm gonna change this candle to a red. So let's say it pokes through, and then it comes back up. It comes back up, and it settles green. Okay. This is very likely a reject, and when it rejects, you need to move that line down, because as it keeps rejecting, it's actually establishing a trend. But we're gonna go over that in just a little bit. We're gonna see in the scenario of a rejection, see what we would do here. So if rejects, it shows it went red, bounced, and the next one is green. We can aim for one green candle here. We do one because we don't know if it's gonna bounce again or if it's just gonna go like that. We don't know. There's no confirmation. You have no idea. What we do know is from these two candles, it told us it's a rejection. It's telling us it's going to go green. It wants to go green. And the next one is, so this is the confirmation. So rejection, confirmation, then we jump in for one candle. Same thing as if it were to break through. If it breaks through, let me move this back up. Let's say it broke through. So we call it the penetrating candle. The larger the penetrating candle, the better it is. And then we have, say, one red, a small red, okay? Not a green, it's a red. A green means indecisiveness. That means you should not enter. So it's one red, small red, it's a small, or even a larger red, it's a confirming candle at this point. Confirming candle means you should enter next. And that usually this third candle is the largest candle. And even if it pulls back like this, your exit is the penetration candle. And the larger the penetration candle, the better. Because it takes way more to pull all the way back up to it, to challenge it. So let's see a scenario of a rejection. So let's say it comes down, penetrates, and then bounce back up. Okay. Then we have to move this line down. And then let's say it goes up and then down again, and it bounces again. And then let's say it comes down, pokes through, bounces up again. See how it keeps bouncing? And as it does that, it becomes a trend. And so on trend days or one and done days, you see that these candles overlap and you get really small movements like that. That means it's just continuing down. And should we play this? It depends on your risk strategy. But we don't have any confirmation, so we should not play it. It's the same peak, just moved further down. And so we're just watching it this whole time, watching it move down. We're still waiting for the penetrating confirming candle. So as it moves down, and all of a sudden it drops really large like that, that is the penetrating candle that was supposed to be here. That's why we keep moving the line down. So you can keep track of where your penetration has moved to. Because this is still one down movement. It hasn't bounced up yet to confirm. It hasn't come up to confirm a peak. So there is no peak. There's also, it's still challenging this previous peak. That's why we keep moving that line. And so if it penetrates, and then it has a red candle, then what does that mean? That means now you enter. You enter, and it should be a very big candle. So let's watch and see today's play on March 11th and see if we can identify any of these strategies here, any of these peaks and any of the patterns. The two strategies we can go over, one is more active and one is more passive. And the passive one is obviously going to be a lot smaller. And so what we're going to do is, let's say it creates a peak, 2 peaks here. You can enter, let's say it comes up, you can put a short up here and it rejects. And what we play for in this strategy is we call it the average down strategy. What we play for is within the peaks. So basically, if it comes like this, and it comes up, and it rejects, we would enter one short here. If it comes back down, and it comes back up again, you can enter again. So you get 2 positions. But because it came back up and then rejected, this is a peak. Okay? And so that means if you average down, you can actually sell here. You can take your profit here. So what we do is we average down each time it hits our peak, and then we exit when it hits the next peak. So I'll give you another scenario here. Let's say it comes up, goes like this, makes a peak. It comes down, it rejects. Okay, we enter one position that is long. As it comes up, if it hits this peak, we exit. You don't exit and then buy as well. You only do one. So we exit that. Let's say it goes like that, and it hits this, we would sell one. We would go down one. If it were to keep going, if it keeps going like this, you let it go. You let it continue to run. Doesn't matter how far it runs, because it needs to pull back. And once it pulls back, you have a target now. What this target does, if it does come back up, if it comes down, you're fine because it's coming back down towards your position. But if it goes back up, there's another peak right here. And what happened do you do? What do you do here on that new high peak? Well, now you double. You double whatever position you're at. If you're at 1, 2, 3, 4, whatever it may be, you always double at the higher peak. Okay, so let's say now I'll enter 2 positions, so I'm -2 because I doubled it. And let's say it keeps going again. Doesn't matter how high it goes, you need to let it run. And then it's going to go back again, go like this, establish another peak. And if it comes back up again, you would double again. So now you have -4. And then eventually, if it hits this, you sell. You sell the peak. You can also average. You can just sell 2. You don't have to sell the whole thing, depending how big that run-up was. And then, again, you don't target this one. You target this peak right here. So if it comes back down, you sell here. You can sell one position as well. You don't have to sell all of it. So you have another peak that you can target, which is down here. So you can let it go run all the way down to this peak. So that's the averaging down risk strategy. And then our other strategy is to play the breakouts, because breakouts are usually larger. We want to run for a shorter amount of time, but we want to have more positions. And so we'll go with that again. So let's say it comes up and challenges this, and it has a penetration candle, a small candle, that's green. So what do? We enter, say, 5 positions, whereas the previous one we only played 1 position. And we ride it up. We take whatever the next candle is, even if it's really small. We take 1 candle. We sell half of what we got. That reduces your risk and it gives you some of the profit. And then it can come down like this, and then it can come back up again, and you keep running until it becomes an overtaking. And what I mean by overtaking candle is you can have a candle, say it goes up green, green, and it comes down red, like that. Well, this didn't clear this previous candle, and that includes the wick of the candle. Okay? The previous candle's wick is the whole candle, whereas the current candle, where it closes, matters. It doesn't matter where the wick is for the current candle. It only matters where the wick is for the previous candle. And so this candle would have say a body like that. Then this needs to come down like that to overtake it. It needs to close below this wick. That's an overtaken candle. That's when we would exit everything. If you can also play the momentum candle. Let's say that's the small candle. Here's the momentum candle. A really big candle that shoots up. If it pulls back, it doesn't matter how big the pullback is. If it bounces and closes above that momentum candle, you stay in, because then it can just go like that. And we'll see that pretty often. It's riskier because you're going to give back more earnings, but you can run and ride the trend longer. So more risk, more reward. Okay. So why don't we open today and play it? And then I'll explain the strategy as we see them in the patterns as well. So I'm just going to run until about 9 and see if we get peak. Right there, so that's 1, right? Pretty simple there. That's the peak. And let's see if we can challenge this one. That's what? 1 reject, 2 reject, indecisive, and then a red. Kind of indecision red. What do we want to wait for here? We want to wait for a overtaking red. So see how these candles all stack on each other, where like the close didn't close. Let me zoom in here. So this candle, it's green, but it didn't overtake that wick. This is red, but it didn't overtake this wick. That's green, and it didn't overtake that wick. This is red, and it didn't overtake this wick. So they're just kind of indecision. They kind of move like this or like that. There's no clear direction. So let's see if we get an overtaken candle, and then we'll see if it goes in that direction. Okay, look at this one. Nope, that one did not. Took a while. Keep going. So if we had entered short here, we'd probably be in the negative at the moment. Okay. There you go. That's an overtaken candle. It closed below the wick of this candle. It overtook 1 candle and 2 candles. The more candles you overtake, the more likely it's going to continue in that trend. So we would want it to close below here. That would be ideal. And then the next candle would challenge this. So right here, it's likely that it would bounce back up a little bit, but we can play small. I'm just going to enter 1 short here, and then my exit would be here. Right? We have a pretty good chance. However, this is not a peak, right? This is still upward movement and no confirmation yet. really to be going down, so there is no peak. It can continue to keep going up. So we're playing half the position we normally play, so we just play 1x. And we're trying to aim for just one overtaken candle. One candle, if it would come up like this, like that, but it doesn't knock us out, and it comes down to here, we're not going to take it. We want one more candle that goes down. So let's see what we get here. There we go, and we're going to exit. We're not going to do any kind of fancy stuff because the peaks have not been confirmed. We kind of want one more candle here. Usually it's like 3 to 4 candles confirms the peak, depending on obviously the volume. So we want at least one more candle, one more red, or even just sideways like this. Sideways movements break the trend, and that's what we really want. Okay, there we go. That's pretty good. Even that dip. So we have the peak there. Okay, we don't really have to worry about that peak. This peak's way more important. So we're gonna establish our lines, and there we go. And now we have that. This looks just like what we've been talking about the whole time. And it's always going to repeat itself. It's always just going to be the 2. And when you're in between these two, we do absolutely nothing, right? Because we're waiting for a peak. We don't know how far it's going to drop and pull back. So what we're aiming for really is either a challenge of this peak or a challenge of that peak. So let's roll it and see what we get. Very nice. And I say it's nice because we want it to continue down to challenge this peak. And if it pulls back up, let's say it pulled back up right here, like that. Well, it moved our peak up. It basically moved it up. We don't pull it up. It's just another peak. So you have 2 peaks. So basically, you have 2 targets. And so it's great. Here we go. We're getting pretty close. It's showing signs of rejection there. And there we go. Here, this strategy, what we're doing right now, you wouldn't play because we're doing the breakout strategy. If you're doing the average down strategy, you can play here. I'll play 1. Okay. It doesn't even phase us that it's dropping down. However, here's the breakout. If this is going to break out, I'm going to switch strategies and play. Okay, it all depends on how you want to play. You use both. You can use a hybrid, or you just do one or the other. You could do the 1x, 2x breakout method, or you can do the averaging down. How about I just stay with this averaging down until we close for positive, and then we'll switch. So here's a breakout candle. It's a smaller breakout candle compared to the previous candle here. So it would have been a lot stronger if it were larger. So let's see if we get a confirming candle next, right? We have a breakout candle, then we have a confirming next. And what does that mean? That is a rejection. And so you move this down. And do we add any positions or anything like that? No, because we haven't confirmed peak. It's just on its way down. There's no peak yet. If this were to come up to this peak here, we would exit. So let's see what happens here. Okay, it's trying again. So this is what we're talking about by continually rejection. And what it does is it just makes a trend. And it kind of elongates and moves this peak down. So now we're going to pull this. With each rejection, we move it down. Just going sideways here. That's very nice. Again, we wouldn't take that. We're waiting for this peak. I'll tell you why we don't take that. Even if it's green and it goes like this, we don't take it until here. Okay, until it makes those 2 peaks. The only exception is when you get really close to the end of the day, like 2 o'clock, where you won't have time. So let's keep rolling and see what we get. You can exit 1 candle worth. You don't have to always challenge it. So like one candle worth, here's the red reject right there, all the way down to the wick. And there it is, we crossed that one candle, and so you could exit here. And it shows a sign of a rejection candle and a red candle. So I'm just gonna hold it and see how high we can actually get here. So I'm gonna do the worst case scenario. Okay, so that establishes our peak. Here's this and that. And this is now a peak. So you have a peak here, and then you have a peak here. What is it doing now? It's doing that very small consolidation thing that we were talking about before. Like that. Just like what we first discussed. That would be a peak there. However, it's a peak inside, so it's not really a peak, right? It's just still continuing. It's only a peak if it breaks down. So if this were to reject and comes down, then come up, then that would be a peak. Right now, it's not really a peak. It's inside the consolidation. And that's what a lot of people get tricked up on, and they will get tricked. So let's see. This is also not a peak. It hasn't picked a direction. It's just consolidating. It just shrunk. So let's see where we go. And here it's testing this, right? So that's the high there that we were talking about. It can come up, then it has a chance to reject all the way back down again. Okay, and that's the line that you really want to test. Not here and not here. This candle, you see one more here that breaks up. Let's see, that's it. Also, there's green. So basically, penetrating candle, and you have a forming candle. The next one should be a pretty big green. It was this small green. Here it is. And then we would take our exit right here. So that's the averaging down strategy. And you would exit because you hit the peak. And then here would be the breakout strategy. Is we would wait for one. That's a breakout candle. We need to wait for one confirming candle. Yeah, that's confirming candle. Then we would go enter 1x. 1x is whatever amount you want to enter with. And we do 10. And our exit is down here. Our exit is that momentum candle right here. And again, it's a soft exit. As in, even if it comes down and comes back up and closes up here, we won't exit unless it closes below. So here we go. Perfect. There you go. That's a perfect example. Came down to the line, but it didn't close below that line. So this is all the way up here now, so it's going to challenge it again. So it really didn't solidify this break, so it's still a moving up trend, and it's still looking for a big break because it hasn't broken that peak. It just moved it up. And what does that mean? If it closes, there you go, it closed, we would exit. You can also play, again, what I mean by whenever you play this, you can only play one candle. So if you're very certain here that after it broke that you believe is going to go down, you can play one candle. And again, it has not established a peak yet. Okay, it needs to go much further like that. So we can enter one here, 1x, and go down, and you get that one candle. There you go. Established our peak up here. This may have kept going, but it doesn't always happen like that. So it could definitely come down and just shoot back up again. It'll catch you out. That's why we only play one. It's still moving downwards. Again, we need to wait for it to pull back for it to establish a peak. So we're still playing just these two peaks over here. Here we go. It has a peak. We're gonna put a line here. I'm gonna change that color so we know that we're inside the two big peaks. So we have one peak, two peak. Right, so if this goes down, we have another one, and that's gonna be the same example as our first example of consolidation. Okay, that's gonna be our example of consolidation. And so these patterns are gonna keep repeating themselves. Ultimately, you just need to pay attention to the two peak and then the establishment of the third peak. And it'll just be the same pattern over and over again. It's just inverse of each other. Right, do we see it? See that consolidation, right? So it's like this. It's extending the consolidation. So there's no breakout. You want to wait for a breakout candle. Just sideways. Pay attention to here and here. And that's why, even though you have consolidation here, and let's say that broke and that confirmed, people would want to enter down. That's not true. See, we're proving here that it's not always true. Even if it were to break up, it's not always true. That's why you just play for the two big peaks. Like, there you go. Like, these are your two peaks, and then it consolidates inside. So it doesn't matter how long this goes on for. It has to break past this line or break below this line for you to really want to play it. Otherwise, if you first see that and you think this is the break, so that breaks through. So let's say like this is the breakthrough candle and this is the confirming candle, and you enter. Well, look at what happened. So it's not always confirmed. They can always just go sideways because of indecision. So we just wait here. We just let it break one of these two. All right, coming down, testing it. We kind of rejected here. See if it try again. Again, we don't play anything inside here right now. The only time you can play this is with the average down strategy. Do this. And that's what we saw today. So let's see here. So here I can just sell. If I want to do the average down strategy, I can sell here. Just sell one. The peak that I know is here. Okay, so I can average that. I can sell another one here, which is would be double, right? So 1 and 1 is double. And if I hit this one up here, it'll be 2 more, so it'll be 4. So we'll do the average down strategy here, which is there's not really any kind of confirmation. You really don't even need confirmation with the average down strategy. You kind of want it to go and then break through because you get to double your position. So this peak and this peak are the same thing. These two are the same. Right here, we're gonna go up, and we're gonna see what happens here. So it tapped the line up here. I'm gonna hope for it to go back up again, so I can just add one more position. And now I'm in the positive. I just wait. I just wait for it to come back down here. Come down here again. this and just move the line up. Again, remember it didn't break that peak, it just moved it up. And there we go. This is, if you're playing the average down strategy, this would be the take profit. We'll see where it goes, if it penetrates. So it rejects it, I'm just gonna buy one. This is the average down strategy again. And if it's down here, I get a double. And really don't have to pay attention, don't have to care, you can come back in an hour, especially because you know where the peaks are. I would put my exit here. And then if I could put another buy here, right, I just walk away for a few hours, or 1 or 2 hours. Okay, that's really close. I'm just exit that. We're just going to zoom in here. We're just going to redraw the peaks. Got one here, the same exact peaks as all the way back here. We just exited, so we don't want to play unless it comes down, comes back up, and then we'll enter another short. But usually, if you take your exit, you don't want to flip the position. You want to make sure. So let's say it comes up here, and it rejects and comes down and comes back up again. Then you can enter, because then if it rejects, that's a double rejection. Double rejection is going to be stronger than a single rejection. So then you're more likely to go down. You could come back up again, a third, you add another position, and if it rejects, you're 3 times more likely to go down. So let's see what happens here. It touched the, oh, it already rejected. We would have entered here. I'll just enter anyways. We would have entered here because it broke through this line, came up here, and that's our average down strategy. We would add one and double at this line. And so we just watch where it goes. It comes down. If it comes back up to this line, I'm just going to delete this line here because that line moved up. Basically, this red line, they're both the same line. So the peak's been moved up. Right, so the peak's here. And so you don't need to pay attention to these peaks anymore. All the top peaks are gone. This is the highest top peak. There's no other top peak, right? This is it. Now you have 1 down here, 2, and 3 on your way down. So you can take profit here. 1, let me draw another line here. 1, 2, 3, take profits, okay? And you only have one direction here. That means when it touches this line, you can just short, and then you can put your stop loss, or you just let it run until it makes a new peak before you exit, before you average down or add another position. And so I'm just gonna let this run. If it keeps going sideways like this and moving down, then it gives us our next take profit. There you go, that's perfect. So now we need this to pull back because we don't know if it's gonna keep going down or if it's just gonna go like that. You only know once it comes back, then you take your profit. So let's see where it goes. And remember, you can take it within one candle. And I'm just gonna take that. We're pretty close here, and we're already almost at 3 o'clock. So I'm just gonna take that. And there you go, that would have been definitely within one candle. And that's the end of the day. So we tried 2 different strategies. The average down strategy would have definitely won today. Won really, really hard today because it goes sideways. If it were to keep running, the breakout would have been a lot better. And that's it. Didn't really focus on winning today, just focused on demonstrating. I think we only did 2 or 3 plays. Let's see what we got. Still 85, 86% win rate, even though we weren't even really trying. And that's all we have for today.